Hello and welcome to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know about oil for the week ahead? Well, we have seen hedge funds and money managers, they have in fact increased their net long positions on crude oil in the latest week. Well, now we've talked about this for a while, where we've been looking to keep accumulating oil positions on these dips lower. We certainly saw that last week getting filled again as we saw a breakdown back below $55 per barrel. And of course, just yesterday, oil prices, they broke back above $57 per barrel. In fact, over two positions, we were able to bank 410 points profit on that breakout. Now, since yesterday, oil prices actually retraced now just over a dollar per barrel here. And you can see, in fact, we've just come up back towards that trend line resistance. Oil is starting to take a bit of a pause here. And again, I'm looking to capitalize on the next pullback back down towards that 55 to 54 US dollar per barrel handle. Effectively, I'm looking at buying evidence to come in at that zone to build further long positions on oil over the course of this week. Now, a few catalysts for the breakout last week. We did see a 4% rise on oil prices on Friday. We of course had the non-farm payrolls, where stronger data than expected has given oil that boost to the upside on Friday, and also all of the optimism regarding the progress between the US and China trade deal. All of this is having a very positive impact on oil prices at the moment. We continue to see the price structure build on the weekly chart with higher lows and also higher highs here as well. We'll also be paying a lot of attention this week too to the oil inventories data, which is due out of course on Wednesday. We're expecting to see an increase in the headline number, but also a drawdown on the gasoline and the distillate inventories. Now, lately, that news item has provided some great opportunities, the volatility of that, to actually buy back into oil at lower prices. So for this week, we are looking to build further positions on oil sub 55 US dollars per barrel. We still have some exposure from last week. We banked 410 points profit yesterday over two trades. We've now protected those positions. We're going to let the rest of the trade run. Ideally, I'm looking for a breakout back towards that 57.50 to 58 level again as we progress between now and the end of the week. We did tap those levels though, the 57.35 level just yesterday. So after fulfilling that zone, I am looking short term here for a correction lower, but again, building up positions at the lower end of these accumulation zones. We've seen again in the latest week, hedge funds and money managers continue to increase their net longs. And typically within the 4-year cycle that we're in at the moment, before the US election, oil does tend to perform very well over the month of November. So I am looking at more upside, at least for the next couple of weeks or so, on crude oil prices here, and I'm aiming to buy in on further dips. So with that, that's been Oil Asset of the Day, and of course I wish you good trading.